Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a supply and demand zone reversal trade on crude oil. So we just had non-farm payrolls come out on crude oil, and you can see we bumped into this supply zone over here on the 5-minute chart and was immediately rejected right back out again. So now that we've rejected back out again, what I'm looking to do is essentially just buy a pullback on the entry and just follow it right back down again. So we had the initial cross down right here into the 1, 2, 3, and that was just a little bit choppy, right? We had the BMTs never really broke underneath them. It just kind of got chopped around. It did end up working, but overall it was a pretty ugly trade. So now that we've got the 4, 5, 6 continuation trade, now we can wait for a pullback and then look to basically take this right back down again. So right now we've got this move down. The 4 low down here isn't going to be confirmed yet just by the way that it's calculated. So what we're looking to do here is get a pull up in price, looking to get around 97.57, 97.58 in that area, and we're going to look to take a sell order essentially right back down again. Now with this high volume coming in, crude oil is kind of sort of stuck where it doesn't look like we're getting any price action coming in. That usually happens especially around non-farm payrolls, where you get these big blocks of volume. Kind of throws the market around a little bit. So again, essentially what we're doing is waiting for price to come off of these lows up into the BMTs in this area here, looking for a reversal bar, and we'll take this right back down again. So waiting for price and actually waiting for the charts to update. That's the only problem that you run into when you're waiting for when you've got these big news events coming around the corner like that. So we'll give it a couple seconds here and try to give it time for the charts to update. There we go. Okay, so we're starting to get a little bit of movement back again. Now, the one nice thing about this setup is on this aggressive move lower out of that supply zone, we blew and torched right through that demand zone. Went right underneath it again. So it does show that the buyers they didn't have enough to really get that move and hold it up from that low there. So that it basically adds a little bit more legs to the downside. So now we just have to wait for price to come back and give us, first of all, it needs to update the charts first, and then we can look to take this short back down again. Usually around 3-4 minutes where we are right now is usually where you're going to see a slow down in terms of how price is moving, so it doesn't get so ridiculous and kind of crazy where you can't keep up with it. But we will give it a little bit of time here, and hopefully we'll get an update soon, so then we can look to take this trade short. Okay, so now that we've got the charts updating, I'm going to place my sell order right here, 97.54, and we're just basically using this indicator right here telling us where we're going to see the reversal. So the low of this candle will be 97.55, so we're going to look to take this short at 97.54. Now the charts still are having a hard time updating, so we'll probably get snapped in here. Yeah, okay, so with that high volume like that, we were snapped into the trade, which is fine. We were filled at 97.54, immediately took out our first 5-tick target, which got our first 5 ticks at 2 contracts. Remember, we were short 4. So the first target at 5 ticks at 49 was filled for basically 10 ticks in total, 5 and 5. Now we're waiting for price to get down to 97.44 for 10-tick target, and then we're looking for an extended target down here at 97.34. Now the stop immediately, because it happened so fast and we were snapped into the trade, means that our stop immediately moved right down 5 ticks from our entry. It does initially start out at 10 ticks, so our stop would have started at 64, but because as soon as we were entered into the trade, hit our target right off the bat, stop ratchets down to -5. Now once we get to the 10-tick target down here at 97.44, the stop will automatically start trailing downward, basically just locking in that profit on the way down. If we can get all the way down without getting too much of a retracement to hit that trailing stop, then we'll be able to fill in that 97.34 final target down here. So what we'll do is, now that we've got the first target filled and our stop is at -5, we'll be back in a little bit once we start moving downward into our targets. All right, we're catching some downward pressure here. We did fill the secondary target on that push down, so now we've locked in 10 ticks and 10 ticks, so we're up $200 so far. Looking essentially for a pullback. Now we've got the 6, 7, 8 if you were looking in terms of wave continuation. So a 6, 7, 8 wave looking back to the downside again, hopefully to get that final push into our final target down here at 97.34. Now we do have a couple different options that we can look for in terms of profit targets. Now we can just use the default that we've got set for the ATM strategy, or we can use something more like an ABCD correction pattern here, which we actually tagged to the tick at 97.40. So what we can do, because we know that we've reached an ABCD, we've already got our profit locked in. Worst case, we make $150 on the trade, losing that 5 extra ticks up here. Now, what we're going to do, because we know we've reached the ABCD, is I'm going to lock out the rest of the risk and move my stop to break even. That way I know that at the minimum I've made $200. And then looking back to the downside, if we tag that 97.34 down there and get that fill, then we'll add another $200 to the total for a total of a $400 trade. So now essentially we're just waiting for price to continue downward, and then we can look to finally fill either our target or our stop up here. We are catching quite a bit of selling pressure coming in after we've had all of the selling come in after non-farm payrolls. And that first 1, 2, 3, that did work, which does show quite a bit of selling pressure coming in terms of selling volume. So a 4, 5, 6, we've already fulfilled rather the 4, 5, 6 move. Now we're just looking for a continuation to a 6, 7, 8 for that final target down there. So what we'll do is we'll be back in a little bit once we have that final target filled, and then hopefully we'll get that final target filled, not the stop, and then we can call it a day. All right, we're getting close, and we actually just filled our target. Perfect. So overall, nice, really nice trade. We've had $400 on this. Took the first target off, 2 contracts at 5 ticks for a total of 10. Then we took the next one off at 10 ticks for a total of 20, and then the final target off at 20 ticks for a total of 40 ticks or $400. Was kind of difficult to trade this one just because of the amount of volume coming in. We saw really a significant slowdown in the terms of how often it was updating the chart just to keep up with that volume. So overall, still worked out really well. Actually took it off a couple ticks just before we bounced. Our target was at 97.34, and it looks like we bounced up from 97.33. So pretty solid on that in that regard. So $400 in the bank, and overall a really solid trade, even though it was a little more difficult to trade. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.